Hi guys, welcome back to the MCQs of CA Inter Financial Management. I'm CA Anuj Jalota. We are hellbent to be doing every possible MCQ. Today we are going to be covering one MCQ. No, we are going to be covering 2, 3, 4, 5. We are going to be covering 6 MCQs today in one short video only. These all MCQs are bit connected. The chapter that we all have selected is working capital. Working capital is something that you all should have enough, else running the business becomes a problem. But don't have too much also, because else it will amount to idle funds. Let's start it off for the day. Just before I start, one small thing. Every Saturday, Sunday, we are coming out with CA Inter regular lectures. These are lectures which are enough for you all to be getting 90 plus quite easily in your costing paper. Do spread this. Currently, the lectures that are coming are in English Hindi mode. Once that thing is over, we are going to be covering all the lectures again once more, but in complete English mode. These lectures are the regular lectures, plus they all have a test at the end of every chapter. We have ranking of every question in form of 1 star, 2 star and 3 star, which are most important. We have a homework section. Combination of all these things do ensure that a student gets the best content, but absolutely at no price. So let's start off the question for today. But before that, as this question is all about working capital, let's try to see what do you mean by working capital. Let's try to have a basic structure of a balance sheet. So therefore, you all have a liabilities. You all have your assets over here. On the liability side, you all have long-term funds. We all have 3 long-term funds: equity shareholders funds. We all have preference share capital, and then in that case you all have debt. Debt could mean debentures, long-term loans, bonds. It could mean something like that. Okay. Apart from that, on the liability side, you might be having something more, and that will be nothing but current liabilities. But I'll come back to current liabilities in just a while. Let's try to see the asset side. You all have fixed assets. These are also called as long-term assets. Okay. Now is a part that we all are interested. Okay, and that part is current assets. Current assets, popular examples could be something like, say, stock. It could be, say, debtors. It could be, say, cash bank, etc., etc. Okay. On the liability side, as I was saying, we have one last thing. That is nothing but short-term liabilities, also called as current liabilities. Popular examples could be, say, your creditors or bank overdraft. Okay. Now, currently, if suppose you try to take this as your balance sheet, okay, then you all will understand that on the asset side, you all have fixed assets, you all have current assets. The asset side is funded by the liability side. Let me do one small thing. Let me take current assets and subtract current liabilities from it. What you will be arriving is nothing but working capital. And your balance sheet structure will change completely from here. It will start to be going till here. So therefore, instead of current assets minus current liabilities, you will have a new item called as working capital. So on liability side, one thing is gone. On the asset side, another thing has come in place of current assets. That is nothing but working capital. So try to be thinking asset side will be funded by the liability side. So therefore, can we say fixed assets and working capital in this case will be funded by what? They will be funded by long-term funds. So equity, preference and debt fund 2 things. Which 2 things? Fixed assets as well as working capital. So therefore, another definition of working capital is coming up on your screen right now. Working capital is that part of current assets, because working capital is current asset minus current liability. So working capital is a component of current asset which is financed by, in this case, long-term funds. So therefore, please do remember, working capital is always financed by long-term funds. Now, this thing is important for you all to understand also, that ultimately working capital always gets financed by equity shares, by preference share capital and by using your debt over here. Let's do something more about working capital. Apart from working capital getting financed by long-term funds, we simply say working capital is nothing but current asset, which is also called as gross working capital, GWC, minus current liabilities. That will give you working capital. Some people call that thing as net working capital. Okay. There is also something called as working capital cycle. Now, whenever you start any business, you need to be investing in fixed assets. You need to buy plant and machinery, land and building, blah, 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 blah. But you also require more amount of money. For what? For working capital. So therefore, we require more money, more cash, because we need to be buying, in this case, raw material stock if we are a manufacturing company. In that raw material stock, you need to be investing or you need to be spending more for labor and overheads. So therefore, raw material can get converted into WIP. WIP, we will keep on processing it unless and until it becomes finished goods. We have finished goods stock with us. What you will do with the stock? Sell it. So therefore, finished goods will start to get converted into debtors. Debtors will pay you the cash. That money that you had invested will come back along with the profits. Again, part of that money will go into purchasing the new raw material stock for the new production cycle. Again WIP, again finished goods, again debtors, again cash, again raw material, again WIP, again finished goods, again debtors, again cash bank. The time that we take to convert cash back into cash is called as duration of working capital. Also sometimes called as duration of operating cycle. Please note down all these particular words. And also do remember that working capital, you should be having enough, because if you do not have enough amount of any of these things, example, if you do not have enough cash, what will happen? You will not be able to purchase raw material stock and you will not be able to pay your creditors. You should be having enough amount of finished goods stock. Why else? What will you sell? Apart from this, you should be having, say, good amount that is trapped in debtors, because you need to receive money from them. So therefore, what I am trying to be saying is that it is important to have adequate amount of working capital. So therefore, your day-to-day obligations are met over here. Considering this entire background that I told you all right now, we are going to be covering few questions of working capital. Let's start to be seeing now. Working capital is defined as, first one, excess of current asset over current liabilities. Okay, that is the first one. Second one, excess of current liabilities over current assets. The third one, excess of fixed assets over long-term liabilities. The last one in this case is none of the above. I think you will know the answer. Please comment. Okay, it is simple. Working capital is nothing but current asset minus current liability. So therefore, that should be the correct answer. That is the correct answer. So that's the first MCQ which we all have done. Let's go over to the second one. Working capital is also known as circulating, fluctuating and revolving capital. The aforesaid statement is, you all have four options: correct, incorrect, cannot say. There is no fourth option. So try to comment whether it's correct or not. Think about the working capital cycle that I told. It'll help you to comment better. Okay, this statement is absolutely correct. See, working capital is also called as circulating capital. Why? Because its form keeps on changing. Its form keeps on. Sometimes that money is in form of raw material stock, sometimes WIP, sometimes finished goods, sometimes debtors, okay, and sometimes in this case again into cash. Okay, same reason it is called as revolving capital, because its form keeps on revolving. Okay, fluctuating capital, why? Because it does not remain constant forever. Okay, it will keep on changing. Sometimes if you have, say, finished good stock, if it will get converted into debtors, then you will realize that profit also, working capital will suddenly increase. Okay, so therefore it keeps on changing also. So therefore it's also called as fluctuating capital. So this statement is absolutely correct. That is the correct one. This was the second MCQ. Let's go over to the third one. The basic objective of working capital management are, okay, what's the basic objective? Give me the four options. Optimum utilization of resources for profitability. Okay. Second one, to meet day-to-day current obligations. Okay. The third one, ensuring marginal return on current assets is always more than cost of capital. And lastly, select any one of the above statements. Now, to be very honest, okay, A, optimum utilization of the resources for profitability. It's not wrong to be saying that this is not the answer. Okay, this can be the answer also. Let's try to use our resources in a better way. Okay, that is one thing, but this is not the basic objective. The basic objective of optimum utilization of resources for profitability is of fixed assets. You should use fixed assets in a proper way. Okay. B, to meet day-to-day current obligation. This should be the answer, to meet day-to-day current obligations. Why? Because ultimately you should have enough amount of working capital, so therefore your business runs smooth. Our very own company at one moment of time, Air India, it struggled because it did not have enough amount of working capital. It did not have money to pay the salaries also. Its operating costs were so high that it was running very short of working capital, and therefore many flights had to get cancelled because of inadequacy of that. This is one problem that many companies face in this world. So this is the basic objective. Okay, so I'm sure that B should be the answer, but I'm reading C also. Ensuring marginal return on current assets is always more than cost of capital. Now, if you'll remember our initial explanation, what is working capital? Working capital is that part of current assets which is met by long-term funds. Long-term funds, cost of long-term funds is nothing but cost of capital. We all try that we all get good return on current assets, but usually it does not happen. If you all have attended our normal lectures for working capital, okay, then you will recall this thing, that current assets do not give you any return. They might give you a very small return as such. Okay, so therefore this thing is met or not, it's a very rare thing. Mostly current assets do not give you any return. Okay, so like, this cannot be your objective as such. So out of all the answers, I think I should be going for, because the question was basic objective. Okay, so basic objective, so answer should be B over here. That should be the correct answer. B is the correct answer. That's it about this question. This was MCQ number 3. Let's go over to the MCQ number 4 now. The term gross working capital is known as, now this is simple one, investment in current liabilities, the investment in long-term liabilities, then investment in current assets, then none of the above. You will be knowing this answer. Please do comment. So I guess answer, it is investment in current assets. That should be the correct answer. Okay, so simple one, it does not require any explanation. In fact, I told this thing also, that current assets are also called as gross working capital. Okay, the next one. The term net working capital refers to the difference between current assets minus current liabilities. I know that you all know this answer, so therefore I will not give you all time to comment also. In case you want to be commenting before the 4 answers come out, please do that. This statement is correct. This statement in this case is incorrect. I cannot be saying. So therefore, please comment the correct answer, which you should have done till now. This statement is absolutely correct. The difference between current asset and current liabilities is going to be called as this. So that is the correct answer. This statement is absolutely correct. Our next MCQ, the concept of operating cycle refers to the average time which elapses between acquisition of the raw material and final cash realization. This statement is, I told you all this question will be coming up. So therefore this statement is correct, this statement is incorrect, this statement partially true. And lastly, I cannot be saying. Now, we did that complete working capital cycle. So try to comment. Now, the question that we all did also, okay, the diagram that I made from cash, okay, again, the money starts to come, okay, in form of cash back. So therefore, you have cash with you, you acquire the raw materials. Then you convert it into WIP. You complete the WIP, you convert them into finished goods. You sell the finished goods, convert them into debtors. Debtors will pay you the money back. So therefore, the time that elapses between the acquisition of the raw materials till the final cash realization is nothing but concept of operating cycle. That's what I told you, duration of working capital or duration of operating cycle. So therefore, this statement is absolutely true. If you all attended our regular lectures also, in fact, we find out the operating cycle in many questions. Why? By adding all these kind of durations only. Okay. So therefore, this statement is absolutely true over here. Okay. So therefore, answer should be true. So therefore, this statement is altogether correct. So we are all done for the day now. We all have covered lot of MCQs in this because all of them were connected. Didn't want to waste your time as such. I'll see you next time in another question like this. Till then, happy learning. Bye. Take care.